Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In yesterday's trading session, that is from a global market perspective, the US markets were shut in trade on account of the Memorial Day. However, in Friday's trading session, if we see the tech-heavy Nasdaq marked a fresh record closing high as it has surged by over 1%. The Dow remained flat in trade. Coming to S&P 500, so the S&P 500 has ended above 5,300 mark with a gain of 0.7%. Going ahead, 5,340, 5,360 will be the crucial hurdle for the index. Any sustainable move above the levels of 5,360 will lead to a sharp upside rally in the index up to the levels of 5,440 followed by 5,500 levels. Coming to Brent crude, so Brent crude has marked a low of 80.45 and thereafter witnessed minor pullback. However, it is still trading in the range of 80.40 on the upside and 84.25. So that's the range it has been trading since the last few sessions. Any sustainable move on either side will lead to a sharp trending move in Brent crude. Coming to the US dollar index, so DXY has resisted near the 20-day EMA level and has been witnessing selling pressure since the last three trading sessions. Going ahead, the zone of 104.20, 104 will be the crucial support for DXY. Now coming to our markets. So in trade yesterday, the benchmark index Nifty took the positive baton from Friday's trading session and marked a fresh all-time high of 23,110. However, it failed to sustain at the higher levels and thereafter witnessed profit booking of nearly 200 points. It has ended the session below the psychological level of 23,000 with a loss of 0.11%. The price action has formed a bearish candle with the shadows on either side of the daily scale. Currently, the index is trading above its short and long-term moving average. This is a bullish sign, but momentum indicators are portraying a different picture. Despite the index marking higher highs since the last three trading sessions, the daily RSI is marking lower lows. This clearly indicates upside momentum is slightly waning. Now coming to the derivative data, so if you see May futures have dipped by 0.17 and the cumulative open interest of the current, next and far series has also dipped by 2.39%, which indicates overall long unwinding. Among the constituents of the Nifty index, 17 stocks have witnessed a long built up, 7 stocks have witnessed short covering rally, while 21 stocks have witnessed short built up and 5 stocks have witnessed long unwinding. For the May monthly series, that is the OI, that is PCR is at 0.89 and the max pain currently is at 22,900. The 23,000 strike has significant call open interest followed by 23,100, and on the put side if we see 22,900 has significant open interest followed by 22,800 strike. Going ahead, the zone of 22,830, 22,800 will act as the crucial support for the index as the prior swing highs and the 5-day EMA is placed in that region. Any sustainable move below the levels of 22,800 will lead to an extension of the profit booking. In that case, it is likely to test the levels of 20,650 followed by 20,500. While on the upside, the resistance has shifted lower in the zone of 22,000. To the zone of 20,980, 23,000 levels. Any sustainable move above the levels of 23,000 will lead to a resumption of the northward journey. Now coming to Bank Nifty, so the Bank Nifty has been outperforming the frontline index since the last three trading sessions. However, it has marked a high of 49,688 on Monday and thereafter witnessed profit booking of over 400 points in the last hour of trading. This resulted in the formation of a shooting star like candlestick pattern on the daily scale. The long upper shadow of the candle indicates selling pressure at higher levels. On the derivative front, if you see May futures has surged by 0.54% and the cumulative open interest of the current, next and far series has dipped by over 9%. This indicates overall short covering rally. 49,500 strike has significant call open interest followed by the 50,000 strike, while on the put side if we see 49,000 has significant open interest followed by 48,500. For the May monthly series, open interest, that is the PCR, is now at 0.98. The max pain is at 49,100 strike. Going ahead for Bank Nifty, the zone of 49,050, 49,000 will act as the immediate support. Any sustainable move below the levels of 49,000 will lead to further selling pressure, while on the upside resistance has shifted lower to the zone of 49,450, 49,500 levels. Now let's look at the key market indicators. So in trade yesterday, the volatility index has surged by nearly 7% and ended above the 23 mark for the first time after June 2022. The current chart structure indicates it is likely to continue its northward journey and test the levels of 24 followed by 25.50. The advanced decline ratio largely tilted in favor of the declining stocks yesterday. Presently within the Nifty index composition, so if you see 78% stocks are trading above their 20 EMA, witnessing a minor dip from 88% on Thursday. This shows that selective stocks have witnessed profit booking from higher levels. Now coming to the key sectors, so among the sectoral indices, if we see Nifty oil and gas is on the verge of a symmetrical triangle breakout on the daily scale. Any sustainable move above the levels of 12,100 will lead to a triangle breakout in the index. In that case, it is likely to test the levels of 12,500. If we see the daily RSI is quoting above 60 mark and it is in a rising trajectory, which is a bullish sign. Apart from this, select stocks from Nifty Auto, Nifty PSE, Nifty PSU Bank are witnessed buying interest. Coming to the FI data, so FI sold to the tune of 541 crores yesterday, while DIS bought to the tune of 922 crores. Looking at the long short ratio, so the long short ratio of FI is currently in index futures, that is at 51.83 on a net basis. This as they bought 37,920 index futures yesterday. On the stock futures front, FIs have bought to the tune of 1,31,423 contracts, while on the options front, FIs sold 1,36,788 call contracts and sold 1,17,852 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.